Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, November the 26th. The year's 2019. Let's talk trading. Quit looking for the easy way. Going through my inbox, there's so many, I guess, Forex or trading marketers out there trying to sell me the easy way. Dashboards. It's like I've written my own dashboard and much better than the ones they wrote. Um, they try and sell me something with arrows or an EA, a robot. I mean, yeah, I heard this one guy says he's got like 13 or 14 robots if you get into his robot group or whatever it is. Of course, you have to pay money for it. But the thing is, why does it work? In the sense that people will give them money for these products. Why does it work? It's because there's an appeal to the emotion. Hey, I've got the secret here, pay me $149 and I'll tell you the secret. Or hey, give me $449 and I'll sell you this indicator that does exactly what you want. And of course it doesn't work, but then somebody might counter, well, TRO, you're selling stuff and you're doing this donational indicators and all this. To go, well, number one, you don't have to donate. Number two, I don't know, hundreds of indicators, probably over 1,000 indicators over the past decade or so out there on Forex forums for free to help people. It's just, you know, so that's it. But I'm not saying any of this is an easy way. No, you as a trader, you have to learn. As I think I've been telling you this for the past few videos. You've got to practice. You just can't buy some indicator and expect, to be raking in the dough. It just doesn't work that way. It really doesn't. I mean, you have to master the fundamentals. And of course, you know what that's leading up to. You have to have your risk and money management in place. In fact, I was listening to a guy, a trader, and he made me think of something where what's really important isn't to focus on the profit, because that's what most traders do. It's like, yeah, they want to get in there, trade, and turn their $1,000 into $1 trillion, right? But what you really need to do is focus on making sure you don't turn that $1,000 into $500. So, I mean, in other words, if you were playing football, you need to focus on the defense. Make sure that that other team doesn't score points before you really worry about scoring points. Because, many times games are won and lost because of defense. And the method, they'll sell you the method, they'll give it a fancy name, they'll dress it up, they'll have testimonials, but come on. I mean, for the most part, it's all snake oil. And then getting back to you, execution and your performance goes back to that practice. What is practice? Practice is repetition. And what does repetition do? It builds confidence if you do it right, and it builds confidence, which leads to success, which leads to more confidence, which leads to more competence, which leads to more success. You can see it in sports. Michael Jordan practiced how long before he got good? How long was he in the NBA before he won championships? Same thing with trading. Most people expect to, hit the ground running and just start, bringing in buckets of money. I mean, admit it. You probably had those thoughts yourself. I know I did. Doesn't always work that way. It just doesn't. You have to get a handle on the risk and money management. You have to get a handle on yourself so you execute. You don't hesitate. You don't freeze. You don't panic. You just basically like a cold-blooded killer out there, and you just go in there and you do your job time after time after time. And you stick to your plan, your method. And you don't method hop. You don't, oh, look, this guy's selling this, blah, blah, blah indicator. I get that. I'm going to make money. And then the next week, oh, this method over here. No, you got to stick to it. You got to practice. You got to put in the reps. You got to put in the chart time, the screen time. It's back to the gym. You can buy a gym membership, but if you don't put the work in, you're not going to get the results. Okay, that's beating a dead horse, right? But I'm going to beat it some more because you cannot lose any more on one trade than you're willing to lose. Otherwise, you're on the path to doom. And of course, fellow traders, these videos are for educational purposes only. And boys and girls, your results may differ from mine, okay? And you all know that Forex trading is very risky. You can lose all your money. That being said, if you are seeking financial advice, seek it from an accredited financial professional. That way, when you lose your money, you got the advice from an accredited financial professional rather than some guy here on YouTube, right? Or something you read on a trading forum on the internet somewhere. Okay. Simple horizontal lines. I've got that on the M5 chart. We can move it over to H1. And you can pretty much see what happened with dollar yen yesterday. I mean, it's broken this high once. I mean, how many times did it break the previous day's high? You can see it looks like we're getting ready for an inside bar here on the H1. But let's go to the weekly and do our normal thing here. We've got 1, 2, 3, 4 pairs that haven't filled the gap. And you can see dollar yen actually broke through the previous week's high there. Right now we're 1 pip below it. Only 59 pips away from that yearly open. There it is right there. And you can see here we broke out of the previous days, or the first day of the week, which was Monday. We broke out of that high. We're 8 pips above it. And we are into that range of the first trading day of the year. And you can see we're above that February open. And it looks like, well, we've got some opens there that we're not above yet. So you get an idea where price is. Ditto on the range for the first day of the year. Okay, there's that inside bar 1 week ago. We broke that high. We're still 1 pip below it. Inside bar trades showing there. Once again, daily high in the range. Only 1 pair over 100 pips, and that's the new beast, the pound New Zealand dollar, I guess pound Kiwi. There's the holo highest open from the day. I guess that's the ho from the day highest open. And here's our lowest open here 6 hours ago. Pivot point. We failed to hit the pivot point. So we might have a missed pivot for today. Right around the future pivot. So we will see what happens. Rat zone, only 32 pips of range, not much, just can't do it. In fact, there were some people asking me about, some traders asking me about what they're doing wrong, and they were showing the wick zone with the dollar yen. And then I reminded them of one thing, actually two things. First, if you've been watching my videos for any length of time, you know I use statistics, uh, especially frequency distribution. Okay. And if you look at the range of the dollar yen right now, it's just not, it's just, it's not giving up the daily range like it used to. So on a wick zone trade, if you look at, what does 2 pips represent? If those 2 pips represent somewhere between 10 and 20% of the range, that's probably, the wick zone's probably not the right tool for the job of trading the yen. Yes, you can still make money off of it, doing it that way, showing the missed pivot there. Let's just fast forward here to the wick zone. Now today was a little bit better than other days, but if you go back here to a daily chart, you can see here it's some of these breaks just aren't that much. So when you run those frequency distributions, actually the frequency distribution would be high minus the previous high and then previous low minus the low. You'll see how they've shrunk. So you want to find a pair or pairs that are going to give you more bang for the buck. They're going to give you more movement. So that's one thing. And the other thing is, why do I keep showing it though, the yen? It's because I want to show traders that you can trade one pair day after day, week after week, month after month. And if you stick with it, you can make money. But you can see here, some of these moves just aren't that big. I mean, there was a nice one here, but it came all the way back. It might have even touched, if you moved your break even up, might have even touched it. Okay. And then here, once again, that's just a few pips. I mean, how many pips is that? The low 87. We're only talking 3 pips. And then, you have to look for clues when to exit. I mean, okay, it went down. You see here, there's the open of the day. It barely went across it. Then it came back up, crossed into that wick zone. See, crossed above another. So it's kind of like, hey, maybe I better get out of this trade. Of course, it could have done just like this, except the other way, but you don't know. You have to trade in real time. Don't have the, you can't be Harry hindsight. I mean, here was another example. It went up, okay, closed above, went up, came back down, and if maybe it was threatening a stop if you had your stop here. But you see here on this one, you had a nice break to the upside, good for about, 13, 14 pips. So even on the yen that has been not yielding these types of trades, it's been more yielding these types of trades, you get your opportunity. And that's why I keep trading the same pair over and over, because sooner or later you will get the opportunities. It's your job here just to, sometimes you got to cut early. Okay. Well, I think there might have been a question on something here. I wanted to get to it. Wasn't that. I think we're back to the range. Yeah. There was traders that still didn't understand these numbers here. And basically I explained that the indicator runs through a loop. This is you have a minimum ATR and you have a maximum ATR, and it's not always the biggest numbers. So in this case, it was 3 was the min and 14 was the max, but in the weekly, 2 was the min. So it could be 5 or 6 or 8 or any number between the 2 and 14 loop. So that's it, fellow traders. Just quit looking for the easy way. It's not going to work. And remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.